Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leivovit, editor and publisher of the Leivovit VR newsletters, also known as VRTrader.com. Mark, welcome back to the show.
Glad to be back. Exciting week on the market.
Mark, do we have a special offer for our listeners?
We do. Just for House Street, we do the 2021 half off, which is 50% off any of the newsletters. So when you go to the order page at VRTrader.com and you pick out one of our interesting newsletters, and when you get to the order page, there's a little place for a promo code, and you enter 2021 half, HALF off, 2021 half off, and you get 50% off any product for any time frame. Thank you for mentioning it.
The dog days of summer sound excited about it.
Yeah, I got a couple dogs back here that are reminding me that they're here.
The stock market, the Dow especially, it started off with a 5% dip and has bounced back. Was that the correction we expected this fall, or just a minor anomaly?
Well, cycles say it shouldn't be, but you know the precedent up to this point has been a sharp, quick correction to get everybody bearish, and then right back to new highs. So that pattern hasn't, been discounted yet or, revoked. So I think it could have been, and we'll find out. Technically we sold off so much. There was a gap on the charts, a downside gap, as we call it technically. We needed to rally back to that, which just happened today. So today being Thursday, so if we fail from these levels, then it could have been just a technical bounce, and then the cycles will be correct and will continue weak into October. So as a trader, you got to watch that. But this is a general statement. The pattern up to this point is the boys, so to speak, who are operating the market, whether you consider them the Fed or the plunge protection team, the working group of financial markets, all these forces that are out there may want to keep this market up into Thanksgiving and Christmas and have those seasonal rallies. So we're watching a day today. We were short, made a little money, and got back short again, but got out quickly when we saw this rally a little stronger than we thought, and now we're just watching. So that's where I'm at.
Mm-hmm. Now, the Evergrande financial crisis in China, it's the second largest real estate firm in the world, much bigger than Lehman Brothers, who helped spring the 2008 recession. The Chinese government has, quote, encouraged them to make their bond payments, especially to their U.S. customers. Do you think the Chinese government would let something like Evergrande ever crash?
Probably not. This is like long-term capital here in the U.S. And I should have mentioned that was the so-called excuse for the big sell-off on Monday. But we were also looking at other things, which we take some credit for. For example, Monday was the full moon, and you had a crash right on the day of the full moon. You also, as we've discussed in a previous interview, we were coming into the FOMC meeting midweek, so I guess there was some angst about that. And we also had the fall equinox, which was due on the 22nd. So you had that coming in from a geocosmic perspective. So you had the Chinese story, the full moon, the autumnal equinox, and a lot of interesting things all occurring, early to mid this week, which I think did have some impact on the markets.
Now, a lot of my guests are technical traders who don't watch the news, don't pay attention to international events. They just watch the charts and make their trades that way. How do you do it? Do you keep an ear and an eye and a foot and a finger on everything?
Everything. We look at the cycles, we look at the volume, we look at the geocosmic, we look at sentiment, what's happening, on the television. And one of the things I did mention a moment ago, which I should mention, is everybody has been bearish for weeks on the market. And if anything would drive this market to new highs, it would be the continuing bearishness that we've had as well. So, the bearish sentiment was telling me that if we did come down, it may not be long-lasting.
Mm-hmm. So, going from here, was that 5% dip enough to satisfy the bears who've been predicting a downturn in the markets, or could we expect something bigger, stronger, faster, and more deadly to accounts in the near future?
The bears are looking for a lot more. The bears are looking for a reversion to the mean, which would be 2,000 or 3,000 points to the downside in the Dow Industrial, the TSX. So the bears are not happy. So let's see if the lows for Monday hold. If those lows for Monday come out, then you may have a very serious decline underway. So I think that's the trigger for those who may be more near term, or not, I wouldn't say longer term, but more near term in the market.
We'll have more with Mark Leivovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leivovit. Mark, the shortages that have plagued the planet, chip shortages for cars, they ran short of garden gnomes in England because of that ship that got stuck in the Suez Canal. The French complained they couldn't get their sex toys because they were stuck on the same ship. Today, I hear there's a tire shortage being predicted for the winter in North America. I went to get a headlight replaced, and my mechanic told me he doesn't have any light bulbs for my particular headlight, and it'll take a week or two to get one. What's with all these shortages, and do you think they're all real?
It's so tough because I'm not in the field, and I don't want to sound overly cynical, but it seems like, this is one way to make some money, too, is, once there's a shortage, they can drive prices up, too. So maybe it is all real, but it seems like one keeps popping up after another, and I tend to be a little bit cynical and contrary about stuff. So one way to squeeze the market higher is to declare there's some shortages. But, I'm not in the field, and maybe there really is some tire shortages. We know there have been supply chain problems, but it just doesn't seem to end. Like you say, it just keeps jumping from one product to another. So I don't know if it's a game being played or it's really real. You would think with the COVID situation more or less, I wouldn't say behind us because it's still a serious virus out there and so forth and so on, but so many people getting vaccinated and going back to work, you would think that the supply chain issues are somewhat resolved, but it's a big question mark, Jim.
Right. Plus, we have so many petrochemical products that are being held up because they're not being made in all those refineries around the Gulf coast of Mexico. Hurricane Ida, which had winds of 223 miles per hour or 359 kilometers per hour, really ripped through the New Orleans area, which is just stacked up with refineries. And so they either can't get supplies or they're still shut down or they're still flooded. That could be, one of the reasons why we're short of especially things like rubber products.
Absolutely. Yeah, I didn't think of that. A refinery issue definitely would do it.
And we have, of course, all the people on the green side saying we should stop exploring for oil and gas right now. Europe's going through an energy crisis because their wind farms have been becalmed for weeks and they've had to switch to oil and natural gas to generate their power. And that's seen people get power bills that used to be $300 top $1,000.
This is what we have to deal with. We're just going to have to see what other, issues pop up here. But it has been a bit of a surprise. And maybe, that's part and parcel why the market start to correct here, this time of year, the culmination of all these supply chain issues and shortages starting to come out. We noticed just the other day, I think it was yesterday, FedEx, which, as you know, is a key indicator in the transportation average, indicated some, disappointing earnings projections or forecasts. So what's going on with the transportation industry? Maybe things are slowing down there, and or maybe it's because of the shortages that they can't do, all that they need to do. But I always watch the transports because they've always seemed to be a leading indicator for the markets and the economy. And unfortunately, the Dow Transport Average has been sort of in the downtrend here for the last couple months, even though the Dow Industrials and the big indexes have been going higher. So a little bit of a divergence there. Maybe it is a warning.
Mm-hmm. Well, you and Bob Hoy both have noticed in the past the transport index is a good thing to watch because when it takes a dip, the stock market eventually follows.
Right, things aren't being delivered or shipped. That's definitely an early sign for the economy.
And of course, Canada and the U.S. are consumer-driven economies. If the consumers aren't getting what they want when they want, do they give up? Do they find alternative sources? And for individual business owners, that could be disastrous heading into the Christmas season if they're not seen as reliable.
I agree. That's something to watch for see if those deliveries start picking up and their business starts picking up. So, unfortunately, there's a lag in getting that information. But I watch the index because as a technician, you see it in the charts first. So that's what we have to monitor.
Mm-hmm. So, Mark, right now, how are you managing your accounts, and are you feeling a little risk averse?
Definitely risk averse. I just think it's this time of year, but I'm not a long-term investor. I would say, I'm not discouraging those from sticking with it. I mean, I don't like to use the expression, dumb money or anything like that, but the so-called dumb money, people who are just passive and just keep their money in their retirement accounts and let the market do what it wants to do have done very well. So, I don't want to break that pattern for them because, history, at least recent history, says, the market doesn't have, any upward, boundaries. So, I guess a lot depends on the, whether more debt is created in Washington, whether $3.5 trillion actually goes through. There seems to be resistance to that, but all this money printing is going to, force money into the markets and, drive it higher. If it doesn't happen, maybe that'd be a negative event, but, the long-term picture, apparently hasn't changed. The technical picture is really poor because we're so extended. And, that's why I guess if you're someone like me, you tend to be a little bit more laid back, particularly this time of year. So, we're doing some individual, stock, and, sector opportunities that, have popped up here. We did a little bit of trading for our clients, and for the most part, we had a decent week. So, to answer your question, I'm not fully invested in the indexes. I'm just using, I guess, the expression guerrilla tactics.
Should people be looking at perhaps adding a little more gold to their portfolio?
I've been bearish on gold for pretty much most of the year since February. I'm waiting for a buying opportunity. It seems like it's normally cheap enough, except there's still some numbers that I'm looking at that say it still could potentially go lower. So a lot of that, I guess, it depends if the stock market resumes its rally and people have less reason to run after the gold. And of course, a lot has to do with the U.S. dollar, which popped up again in recent sessions. So I'm as eager as anybody to get back in the gold market. I sort of thought we could get lower this year, maybe in U.S. dollar terms, 1,500 or lower. So far, we only got to 1675. That may have been enough. So I'm just going to have to watch the technical patterns here. It sure looks oversold to me, but I'm not getting any super buy triggers. And I had speculated that silver in particular could get under $20, maybe 19, as a better buy, again, priced in U.S. dollars. So, we'll see if that unfolds. But seasonally, we should be starting to get stronger here. And, we may get a strong technical signal tomorrow. So I'm on the lookout for it. But I've been cautious for most of the year. And, so far that's been, the safer strategy.
Is El Salvador the wave of the future where Bitcoin is now one of their official currencies along with the U.S. dollar? And I guess they might have their own local currency, or maybe they just rely on the greenback for regular transactions. Will other countries decide to do this, or are they doomed to failure?
It's a tough question. There's been bears surrounding the Bitcoin story, as you know, for 10 years since the darn thing got created, and the bears have been wrong, except for some corrections along the way. We seem to be in a corrective period here. There is risk in Bitcoin, technically, even down under 20,000 again. But my gut feeling is, if the game's not over, and it could surprise the bears as it has, and Bitcoin has been, as you said, being accepted in other places. There's a reason why Bitcoin is priced at $35,000-$40,000 a coin versus the others, which are much cheaper. There's just a lot of faith and investment interest in the coin, and that might be telling you that its future is bright, not negative. And the bulls are telling you, Bitcoin could be $100,000 to $500,000 a coin in the next few years. So, the bears say, well, governments are going to stop it, and it's going to go to zero. But except for zigzags and trading swings in it, and I'm talking about all the cryptos as well, it seems like they still have a bright future. So, and it's also distrust of government, and there's a lot of reasons to be distrustful of government. You talk about the financial stupidity as well as the political stupidity around the world, and money, tries to find a safe haven. And the crypto market apparently is one of those havens. So I think you have to be positive on them. I don't think the future is negative at all, and Bitcoin could surprise the bears. So not to say you can't have a little bit more of a correction in it, but I wouldn't sell my coin.
Mark, before we go, we always say we invite listener questions, and we have one for you from Justin in Berkeley, California. Justin emails us, I've been enjoying Mark's multi-discipline approach to market predictions. Since Mark follows cycles, geocosmic events, and so on, I was wondering if he thought we are now in some repeated environmental political cycle not seen since the 1920s and 30s. Currently, we have a Dust Bowl drought just like the 30s, which had pretty hot temperatures, high speculation in markets, homelessness, tense geopolitical turmoil between the upper and lower classes, and lots of anger and blame between large political powers. Your comment, Mark?
Well, the answer is yes, cycles do repeat, but I can only cite, there's one big cycle called the Kondratiev wave, which is named after a Russian economist, and we do tend to have these 40-year cycles, and we see it in weather, we see it in politics, we see it in the market, so I don't have all the specifics, but I can't cite the specific cycle that would be other than maybe the Kondratiev wave, but we do have repetitive cycles in nature and for all of existence, so if I'm a believer in the cycles of the moon and the seasonal cycles, and we have short-term cycles in the market, like turnaround Tuesdays and the Santa Claus rally, and the January effect, where stocks that are sold off at the end of the year tend to do better in January after tax loss selling. So we see so many versions of cycles, whether it's nature, whether it's in the equity markets themselves. So I'm a believer, and I agree with the comment. I just can't cite the specific cycle, and we've learned if you study back over the centuries, and a lot of people have done this work, I could be better prepared to answer this if I studied some of the research of others that have studied the bigger cycles. You definitely come to expect it, both in weather and stocks, and that's why I'm such a big believer in looking at other forces that could be affecting us both personally, geocosmically, economically, because there's a lot of things that are happening out there. So why these cycles happen, Jim? I mean, is it just accident? No, you got the power of the universe out there, just like you've got the moon affecting the tides here on Earth, and some say humans themselves, because we're comprised mostly of water. So there's forces that create these cycles, seasonal cycles, and we can get into a whole tangent conversation here about global warming and all this discussion. Well, a lot of it just has to do with the big picture, what the planet does every period of time, whether it's hundreds or thousands of years. You just run through a series of cycles. So you have to be cycle conscious. There's actually a great publication out there, a research organization called the Foundation for the Study of Cycles. You may want to look that up. And they produce a lot of very interesting research, and I think we can probably get some of our answers through that organization.
And Justin, also, if you're interested in cycles, you should listen to our interviews with Eric Haddock from InsideTrackTrading.com. He too takes a look at those 40-year cycles that keep cropping up, and they affect more than just markets. Apparently, they have to do with violence, human behavior, and so on as well.
Yeah, absolutely. I mean, a lot of this stuff, when you start talking 40-year cycles, and when everyone's concerned what the markets are doing tomorrow or what the next political move is going to be next week, that doesn't do you a lot of good, but it certainly gives you, some perspective in terms of, really, where we stand in the scheme of things. So, how do you prepare for a 40-year cycle or a Kondratiev wave, which I think is a 60 or 70-year cycle? It's very tough to do that when you're running your day-to-day, existence, and we're only here on the planet for a very short period of time as individuals. So it's great for discussion, whether you could profit from it, which is the focus, I think, of these broadcasts, of how you benefit economically and financially, is a little more tricky. You got to really fine-tune your stuff. So what I'm saying is great talking about the big picture cycles, but how do you implement that in your life,
Mark, thank you so much for chatting with us and for answering our listener question.
My pleasure. Talk to you next week.
My guest has been Mark Leivovit, editor and publisher of the Leivovit VR newsletters, also known as VRtrader.com. If you have any questions for Mark, you can send them to info@HowStreet.com, and we'll ask that question for you. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.